focus and take you through a management conversation. We've got Mr. Baskar Subramanian, the Managing Director and CEO of Amagi Media Labs, joining us on the show. Mr. Subramanian, hi. Good afternoon. Thank you for your time. Let's start by talking about your FY26 performance. FY26 as a year has marked a significant inflection in both growth and profitability for you. Now, as the company scales over the next 3 to 5 years, how should one think about the sustainable revenue growth trajectory, margin expansion, any levers for growth going ahead?
If you look at it, Amagi is a media technology company, and we are a B2B business, literally working with content creators, owners, TV networks who want to take their content to multiple different distribution platforms worldwide. So Amagi's core purpose is actually built on three big levers that we leverage today. First is modernizing our customers to move to the cloud as a virtualized software infrastructure. The second part is to really enable them to have one single platform from where they can distribute content worldwide, very similar to what omni-channel retail happens today. The third part is enable them to monetize and even transact content through a marketplace. These are three aspects that we do today for our customers, what we call as a glass-to-glass industry cloud architecture that we're really building for our customers. Now, coming back to your question in terms of sustainability, if you look at it, we're in a very early phase of this transformation that's happening. If you look at it, we've always talked about saying less than 10% of people have actually moved to the cloud in terms of the TV operating model today. And we see that as a significant uptick that's going to happen over the next 3 to 5 years. The second aspect is as unification happens, streaming is going to really pick up, and we're seeing this, and content is going global, which means essentially this is the early start of this whole globalization journey for our customers. That's going to be the biggest, second biggest lever for us, for example. Third is, if you look at it, advertising is becoming an important aspect of our customers' monetization journey. Not only subscription, but advertising is becoming bigger. We truly see a possibility of really applying that as well. Those are the three big market levers that are happening. Having said that, on top of it, if you look at it, with the AI coming along, we see a super interesting opportunity for us to build operating leverage for our customers through agentic infrastructure, so which is a big, big push for the company. And absolutely, given what AI and Gen AI can do, now we're able to enable our customers to transform their existing content and be able to create new formats, which I think is a revenue possibility for our customers and for us in that particular bargain. So we are overall very excited about the growth prospects in front of us. We've demonstrated operating leverage in our company, continue to invest in technology, and serving a very, very clear cohort of customers, which has been always, we want to be the leaders in the space. We continue to see that as an important step in the direction of creating innovations which will drive progress for our customers.
Understood. So thanks for that outlook. Mr. Subramanian, how does cash flow conversion work for you, and what are the key drivers supporting it across your businesses?
So largely, if you look at it, as you've seen, we are not a capex intensive business, number one. Number two, I think typically the operating leverage is played out by truly because it's a subscription driven businesses. There is annuity in the business automatically designed into the system. So every dollar that we're investing today is largely for investing in the future of this business rather than for the past or the present. So to that extent, I think we are comfortable that we see eventually and directionally, if you look at it, our free cash flow, FCF will continue to kind of progress forward, and it'll be close to the EBITDA that we're actually doing. So eventually, I think there'll be convergence of the EBITDA and the FCF as we move forward. We continue to monitor that and map that. But from a business structure standpoint, there's nothing stops us because there's no real big capex investments that we're making. And we are a complete 100% software company.
Okay, understood. So not very heavy on the capex front. Mr. Subramanian, how much of your FY27 revenue is already visible through contracted business and customer expansion opportunities at present? And any trends that you're seeing in terms of pipeline quality, deal sizes, and enterprise customer demand across geographies?
Let me kind of split this into two parts, right? First part, if you look at it, is because we're a subscription business, there is good amount of predictability and certainty in our business as we get into the next year or the current year as we speak, right? So that happens every time for us. And if you look at it, we have demonstrated NRR of 120% plus over the last 3 years, and we see that as a continuing trend line as we move forward as well. So that's something that should give a lot of comfort in terms of certainty that we've seen before. Specifically on the pipeline growth, clearly we're seeing a lot more robust pipeline build out. primarily in the modernization space because lots of the customers are starting to move to the cloud, largely because the complexity of managing infrastructure is becoming further uh, a bigger challenge for people, right? Given all these security issues, given uptime, and given latencies and others, we're seeing a lot of dramatic push from our customers to move to the cloud and to kind of leverage the AI bandwagon in terms of new technologies that can actually accelerate their businesses. So to that extent, I think we're seeing a robust pipeline build out. I think in the next 2 to 3 years, we're seeing quite a bit of robust modernization journeys that will start and transform into a complete 100% cloud infrastructure that we're delivering for our customers.
Noted and understood, Mr. Subramanian. But on that note, I'd request you to wait by with us. We'll have to slip into a time-bound commercial, but we'll continue the conversation on the other side. So viewers, stay tuned and we'll be right back on the other side of this very short break. Back with Markets at Noon, and before the break, we were in conversation with the management of Amagi Media Labs. Mr. Subramanian had joined us on the show. Mr. Subramanian, thanks so much for joining us. Just want to sum up the conversation that we have seen so far in terms of the kind of moves that we've seen in FY26 and your outlook ahead. But also, I'm concerned about monetization and cloud modernization. They continue to grow faster than your streaming unification. How do you expect the overall revenue mix to shape up, the overall profitability of the business to evolve over the next few years? And which segments are you going to be focusing more on?
Couple of things. If you look at our business, 25% roughly comes from the modernization part of the business. Roughly 50 to 55% comes from the streaming unification part of the business, and the remaining comes from the monetization, the marketplace business. We continue to see this as a trend line where you're going to see slight progression in terms of the mix, but the mix is largely going to be the same, number one. Number two, we are starting to see that our gross margin is, if you look at it, has been consistent across all the three segments. So we don't have a large differential gross margin across these three segments. So to that extent, we think the profitability profile of these businesses will exactly be kind of very similar to what you're seeing today in terms of what the gross margin is going to continue to be. And henceforth, it's going to be really dependent on the operating leverage of the company in terms of how we manage our expenses, in terms of our R&D spends, sales and marketing, and G&A. Those are the real levers that I see going forward. And so that's the future of how we see this. So we're quite comfortable and excited about where we are as a company.
Okay, so that's the outlook going ahead. And lastly, with a strong cash balance of roughly 1,600 crore rupees, will strategic gaps remain within the glass-to-glass ecosystem like we were talking about? And are you seeing any acquisition or investment opportunities to accelerate growth, let's say, sometime in the near future?
We have, again, as you rightly pointed out, there is cash in the bank, which I think we are quite comfortable with the cash that we have today. And what we are essentially starting to look at is target what sort of opportunities exist in the glass-to-glass flow. Today, we are early in this whole glass-to-glass journey. I think we are kind of in the very early phase of this whole transformation that's happening. So there are enough opportunities that we see that we can actually bring through inorganic means. We have an active corp dev program that's running. We continue to see different parts of the businesses where we think there are potential possibilities to bring in inorganic opportunities which you can bring in and actually accelerate the business. We continue to look at it. Nothing right now that we have on hand right now, but happy to come back once we have anything which is concrete. But clearly, there's a lot of activity happening on that front. The companies continue to scout and search for what's the right opportunities to look at. Obviously, we're conservative in terms of how we look at it. We're not irrational in terms of how we look at things. So that's the reason it's taking some time, but we want to do surefire, good deals as we see this progressing in this year.
Good. Mr. Subramanian, thank you so much for your time. On that note, we'll let you go. Thanks so much for speaking with us today. So viewers, that was the management of Amagi Media Labs sharing with us their FY27 outlook and beyond, the levers that will lead to the kind of growth that they're penciling in, and of course, the capex plans as well as the acquisition plans going ahead. But on that note, time to slip into yet another very short break. On the other side, we'll interact with Mr. Rohit Srivastava, who's a technical expert, and he'll give us better sense on how to take a look and read the market as volatile as this one. But on that note, time to slip into a very short break. Be right back.